But Meta Platforms, back to that one, that's up 23% this week, partly because of its firing its staff to bring its costs under control, which I guess kind of makes sense and was what investors were looking for, but partly because the whole damn market's gone up today. Anyway, that's to do with inflation. What's happened there, Steve?
So it's CPI today. CPI is coming lighter than everybody expected. I think it was a 0.4% increase month on month, which brings us to, is it 7.5%, Steve? So
7.7 year over year today.
For some reason, that is a reason to be cheery, I guess. It does show that inflation is coming down. Inflation is obviously, if you times that 0.4 by 12, that gets you to the expected inflation at this current period of time. It's obviously a lot less than what we're currently experiencing. This could be a big fake out, this, Steve. We've had this before. We've had a lower read before and all got very excited. And then the next 2 months were way over what we expected. So I would edge caution, I guess, as somebody who can't give you any kind of advice because I'm not qualified. But for me, I'm happy to watch this one. How about you?
I'm also viewing this with a little bit of caution, partly because of the reasons connected to my ISA that I mentioned before, but partly because, so I'm seeing things coming down. The reading was 9.1 in June, 8.5 in July, 8.3 in August, 8.2 in September, 7.7 now for October, because the read goes for the previous month, basically. I know it's now November, but we're reading October's numbers here. I guess a couple of things that I think about this. So I can see it coming in the right direction. By the way, turns out inflation is transitory, just a bit sort of longer transitory than everyone thought. It's a longer transit period. It's all fine. I guess one thing to be aware of here is that inflation rates are basically measuring a rate of increase year over year, and since prices were going up last year, that doesn't mean, even if they start slowing down here, that prices are getting any cheaper here. It just means they're going up by less. And if you thought cost of living was already high, and you thought that stuff was expensive in the first place, a bit more each time, even if it's only a little bit more each time, is still a fairly significant thing. So if you were looking for kind of US spending, this is a sign that it's slowing. The US economy is probably slowing. We're due a GDP number a bit further in the future, but we're also still a very long way from home. The Fed is looking for 2%, and lower numbers might cause them to think about slowing down in their kind of rate hikes and so on. But it feels like we're still a long way off for me at the moment.
Yeah, I don't think we'll see anything significant from any of the next Fed meetings for quite a while. I don't think they'll be happy with one good CPI report coming in. I think they'll want to see 2, 3, 4, 5 of these before they start to take the foot off the gas of hikes. I personally would expect another 0.75 hike. I think the best we can expect is a 0.5% hike for short-term relief. I would argue it's probably better that we don't get short-term relief and that we just see this through now. I think is probably where I'd say we need to be.
I think something similar. I mean, I guess the hope might be on the optimistic side that this will kind of catch its own momentum here, because inflation caught its own momentum on the way up, right? So we got here by wind back a couple of years and we were in a pandemic, and the US is sorting this out by cutting interest rates low and effectively pumping stimulus money into everybody, which is okay. That's a plan, and it brought them through it reasonably well. You all saw what happened to the stock market, right? It went up an awful lot. And mostly because earnings went up an awful lot in these cases. So sure, stuff traded at higher multiples because of low interest rates, but earnings kept pace with it and got up there enough to justify what was going on a little bit. So that kind of happened, and low interest rates and some stimulus and some easy money meant people went spending. Basically, because that's what people do when they have a load of money that's extra here. And extra spending meant that businesses needed extra hiring, which meant extra wages, which meant that prices went up. And of course, if you're paying a load more people and you're paying them sort of decent wages, then they've got more money and then they keep spending. And we go up and we go up and we go up and we go up. And the whole cycle and process just carries on and on to the point where we got to sort of 9.1 in June, which is where inflation appeared to hit its peak. Whether we can get some kind of more organic momentum like that going on, although it feels like a very brutal way to think about things here. With fewer people in jobs, as a result, prices come down because people have less money to spend and so on. From what I was seeing, there's still a bit to burn out of this kind of system, but it might be that there's just enough there that things can kind of organically wind their way down without the Fed pushing significantly higher and significantly quickly at this particular point. I guess I'm not sure what I think optimistic looks like, to be honest. I wouldn't mind some low share prices and high interest rates. It just looks to me like returns are better for investors when that happens. But what do you think?
I guess in terms of a recovery, all we need is to just carry on the path that we're on now, I think, in terms of an economic recovery anyway, never mind the stock market for now. So I'm interested to see the Fed stay its course. I think it's too early to pivot. I think that could be a disaster. I really enjoyed listening to Druckenmiller on the subject, and he said that rates of inflation has never come down to 2% without with rates being above the level of inflation. Now, with the level of inflation coming down, there should be an opportunity to push the interest rates over it quite nicely. And then, if we need to, and I guess that the US government will be keen for the Fed to do so, but to just take the foot off the gas a little bit at some point, wouldn't be a miss for especially for the American government. But I was interested to see on LBC last week, Steve, just after we recorded, Danny Blanchflower was on. I think it was Tom Swarbrick's show, and he's ex-Bank of England. He's since left. I think he's retired. And he is not happy with the Bank of England and what they're doing in the interest rates. He thinks they're trying to tank the economy. And his reason was essentially that the British problem isn't the same as the American problem. We haven't injected anywhere near as much money into the system. We haven't directly put checks in pockets in the way that Americans did as kind of like a cash buffer to get yourself going. He thinks the Fairlow scheme was different. The Fairlow scheme was about upkeep rather than cash. So he thinks that all of the inflation problems in the UK are lent by supply shocks and spending demand globally because there was a lot of cash, and he doesn't think that the English market the Bank of England needs to push as hard as they're suggesting they're going to push to bring it down. He thinks it's going to be a disaster, essentially, is what he's saying. I would urge everybody to have a look at it. I think if you just search Danny Blanchflower, Tom Swarbrick, it should come up. It was a really interesting chat. It's only about 5 or 10 minutes, but he's an angry man. But what do you think about that, Steve?
That does sound very interesting because, of course, it's a fairly obvious point that, yes, the UK market responds to US news and US markets, and you would expect them to do that, right? Because as US prices go up, UK prices become more attractive by comparison if they don't move, effectively. So you would expect them to kind of go up along with it. And the S&P was up 4.5% when I looked, and the FTSE 100 was up 1 and a bit %. So, as usual, a kind of smaller move to the upside from the FTSE, but nonetheless, positive momentum caught from that kind of exchange. I'm interested in the idea then that, this kind of US data is dealing with a different situation to the UK. I can see that there's differences in some ways, but one of the things that I think this speaks well of is, regardless of whether you think a policy is the best one, or whether you think it's a risky one, or whether you think it's an unfair one, it does look like the US is getting some joy by persisting with its policy, basically. So it's had Powell in hiking rates and saying, look, I am going to hike rates until this happens. And to be fair, fairly aggressively towing that line and sticking to that kind of principle and not being driven off it by various people saying you're now hiking too fast, this is all too quick, maybe plausibly, but he's found a view and he's going to stick with it and follow that strategy through. And when I look at what's been happening over here in the UK, regardless of what you think of the government, again, I've seen government after government after government coming in, and it looks like we haven't had the kind of coherent plan for about more than 10 minutes or something like that. We had the kind of, I guess, Johnson-Sunak a strategy, which was to let people's heating prices go high-ish. And then we had the brief Truss Kwarteng thing, and then we switched that again fairly quickly because that was so unpopular. That was a kind of low rates, growth stimulating plan. Okay, make of that what you will. We did on this show. And now we've got kind of yet another one, and it feels to me like there is an advantage, or at least something to be said, for being able to follow through on a plan once you have one. And the more the UK chops and changes and does one thing and then another thing, effectively all it does is just undo any progress that was done by the previous thing. That's not to take any view whatsoever on whether this is the plan that we currently have. I'm not entirely sure what the current plan is, to be honest. Is the best one, the only one, the most efficient one, the least fair one? Any of that? No idea. But it does look to me like the US is benefiting from being able to have a plan and follow it through.
Yeah, and again, these guys who are running the banks of England and the Federal Reserve, they're not at the liberty of being able to A/B test. It's not like they can get so far down the line and say, "Hang on a second, this was wrong. Let's just rewind and we'll try a different tack." They've got to do what they believe is the right thing at the time. So, and there's going to be people on both sides who say, "Oh, you stopped too early and inflation's off again. People can't afford to eat." And then there's the other side who is saying, "Oh, you're raising rates too high. People's mortgages are getting too high. They now they don't have enough money to eat." So there's like both sides of the debate here are like littered with mines, aren't they? Essentially, that the Bank of England and the Fed are just gonna walk into. It's just one of those scenarios where I'm really glad I'm absolutely nothing to do with that, and I can sit behind my desk and I could choose to do nothing if I want on that day, and it probably wouldn't hurt anybody. I don't think Powell and co are particularly in that situation.
No, there's talk of a strike coming actually from the union that represents people in my industry, and one or two people have been voicing a thought to me there that says we really shouldn't strike because people will notice that, say, we go on strike and their lights don't go out or anything like that. So I've been thinking about this a little bit too.